Hello, good afternoon. My name is Tyler Unks, and welcome to Ferris Sensors, the leading manufacturing and distribution company in the industry. This is the shareholders presentation, and let me get started by introducing some of our team members. Firstly, there's me, Tyler Unks, the Chief Operations Officer. We have David Soon, our President of Research and Development. Our Chief Financial Officer, Dale Suk. James Wallach, our Chief Executive Officer. Melissa Zapta, our President of Marketing, and Catherine Terrell, our Vice President of Marketing. Our agenda for today, we're going to be discussing our company mission, our goals, and strategies we've implemented along the way. We're going to talk about the results from previous years, and we're going to do an analysis of the previous years and our performance. And lastly, we're going to talk about why it's going to be a smart decision to continue to invest in our company. And with that being said, I'm going to turn the mic over to David, and he's going to discuss the quality of mission. Thank you.
Alright, thank you Tyler for the great introduction. Now, at Ferris Sensor, our mission statement is to provide high quality sensors while still keeping the price low. And our goals is to become the industry lowest cost provider of the product. And also keep the price low without sacrificing the customer satisfaction. So in order to reach both sides at the same time, we decided to adopt a global cost leadership strategy where there were two main approaches when it comes to reducing cost. The first one is controlling the cost driver. Our activities are performed in a larger volume in order to drive down the fixed cost per unit. Also, first mover advantage. Our firm is the first firm to introduce our product into the Asia and Europe market. It also helps provide cost advantage. And outsourcing. And it involves buying from outside specialists who can perform the same task for cheaper. And operating decisions have definitely helped us outperform some of our competitors already. Now, the second approach is the modifying value chain. When we're producing our product, we avoid using high cost material, and also now we tend to shift our business into an e-business model where buyer and seller is connect directly without all the channel cost. And also simplify the product design from the beginning to the end. We try to use the standardized components part, and that way it drives down the cost significantly.
Hi everyone, my name is Dale Suk and I'm the company CFO for Ferris, and I'm here to talk to you guys about market share, which includes Americas, Europe, and Asia Pacific. It helps us understand who is the leading supplier to our consumer in our industry, affecting our sale, helps us understand and forecast our demand, and also understand who is the leader in providing products for consumers in this market. And we are happy to say that in year one, we were a dominant supplier, and then in year 4 we were also the dominant supplier. So overall we were the dominant supplier in this factor. So we are happy to say this because it also shows us that we have possibility of growth rate for our individual market, and then it means more sales and profits for us in the future. Next is sales and money collected from providing consumers with our products. In year 1 we had almost 70K, and by year 4 we had close to 208K. And that is very important to us because more sales means possible more profit. And if you look at the chart, you can generally see that we had a growth, which means we are more likely to make more sales in the future. And the next one is trend for market and sales, and this is important to us because we decided to make a trend line comparing to our most relevant competitor, which is Chester. And from doing this, we were able to see that we have a not faster, but better growth rate than Chester. Next is contribution margin, which gives us information on how much we regularly spend on our production and how much is likely to be our profit. It is usually done by sales minus variable cost. And if you see, we had a drop in year 2 and year 3. That is because we were trying to figure out what is the best method for us during production, and we had some struggle, but we were able to figure it out by year 4, and that's why we had a better contribution margin than average for that year. And the next one is cumulative profit, which is the total profit collected from year 1 to year 4. And as you see, we are number 2 in this, and number 1 is Chester again. So we are seeking new ways and new methods to figure out how to compete with them at a better level. Next is return on sales, which shows our company's efficiency and our profitability. It shows us by measuring how much profit was made per dollar of sales. So if you look, in year 1, almost everyone was successful, but by year 4, only Chester and Ferris was successful at profiting from every dollar of sales. And asset turnover measures how efficiently we were able to convert our asset into revenue. The higher the asset turnover means that the company is performing at a level higher. The company is generating more revenue per dollars of company asset. So this means, for example, let's say I have $1 in company asset, and let's say my asset turnover was 2.0. That means the dollar I spent on investment, I was able to generate a revenue of $2. So if you look at this chart, you can see from year 1 to year 4 that our company was very good at using our investment and our asset very wisely and efficiently to providing profit and generating revenue than most people in our industry. And that is my presentation, and thank you for watching.
Hello, my name is James Wallach, and I'm the CEO of Ferris Group. My part that was assigned to me was management analysis. Now, 3 points we were able to achieve were low variable costs, high contribution margins, and low operating costs. How we were able to lower variable costs was increase automation and increase capacity. Obviously, diseconomies of scale comes into play, so the more you make, the cheaper it gets. High contribution margins, I was actually told by my grandfather, who owns his company, that 30% should be the average contribution margins for your entire company. Also, we were able to lower operating costs. Once we reduced our debt, our administrative costs also dropped, and a lot more costs such as shipping decreased also. Now for the future, we have 3 things we're trying to shoot for. We obviously want to do a little better on capacity planning. We were never on point. We actually had a bunch of periods where we stocked out. Our next point is terminate long-term debt. We want to completely eliminate it, just like our national debt. We're trying to get it down as fast as possible. And also increase our stock price. Everybody makes it, everybody's a winner when your investors are happy and the company's doing well. So those are 3 things we're trying to shoot for in the future.
Hello, my name is Catherine Terrell, and I am the Vice President of Marketing here at Ferris. While Ferris is ranked 2nd overall, we are 1st in the global market. We focused our efforts on obtaining a first-mover advantage in the global setting, and our international sales accounted for approximately 55% of all international sales, bringing in an overall international profit of over $24 million. Initially, we began doing business only in Europe. However, the untapped market in Asia was too tempting to avoid. Our first-mover advantage in both markets earned us a monopoly-like status, and even as others began to enter the markets, we continued to thrive and grow. While we've made a splash in the international setting, and intend to continue doing so, we'd like to achieve the same success with our American consumers. Our focus in the upcoming years is to focus our American sales a bit more and make this a real global company. The focus is on every region and every consumer. Our successes in the international market makes us a smart investment as we continue to grow and expand. Thank you.
Thanks, Kate. Good morning, everyone. My name is Melissa, and I'm the Marketing President over at Ferris Sensors. We believe over at Ferris Sensors that investors should continue to invest in our company because for the past 4 years, we have been able to maintain a market share lead in the global market. As shown in these graphs, profits from operations in Europe and Asia have equated approximately 72% of all sales. We have also been the only company with no emergency loans, proving that we are a self-sustaining company that has been able to learn to manage and distribute our wealth where needed. Our long-term goals for the future are to maintain our large market share in the global market, and also increase our customer satisfaction by giving customers the products they want at the prices and specifications they desire. We would also like to continue to maintain at least 2 competitive products and also launch a product in the near future with top quality and also an affordable price. We hope that you make the right decision and choose our company to invest in. Thank you for listening to our presentation and have a great day.